the transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate?
It was initially the 12% return, but it quickly turned into the people.
All right, welcome back to another episode of the Multifamily Masterclass. I'm joined by our regional property manager, Heather Andrews, and our co-founder, John Kobierowski. I think that's right.
You got it right every time.
Kobierowski?
Keep second guessing
I practice
yourself.
in the mirror. But no, it's an exciting podcast today. We're going to talk about our newest acquisition, our newest offering, Venture on 52nd Street. So we launched this on February 26th within the first 24 hours. Thank you to our investors. We were able to raise over $1 million. And fast forward a week, we are well on our way to hitting our target raise, which is $2 million. And we have a max raise of $5.5 million.
Easy peasy.
This is a beautiful property in Arcadia. You know, Heather's got a lot of information about it, so does John. But to get started, can you guys give me a high-level overview as to why this is such a unique and great opportunity for investors?
Want to start off, Heather?
Yeah. Well, I'm going to start. I'll tell you, it is a already healthy, functioning property.
Yeah.
That was not the issue here. This was already well leased. We've already had several move-ins. The location is fantastic. You get to be in Arcadia South, but very cool. Restaurants and shops right down the road from our property. You have a Costco, a Target, Fry's Food and Drug, which is the best grocery store. So very conducive to your day-to-day living. We're close to the airport, there's schools there, so that brings in a lot of traffic. We have a lot of drive-by traffic, or people walk by and stop in. And the property itself is just a really pretty property with 3 different kind of unit types, which I love to be able to offer a variety of units, so it fits everybody, whether 2-bedroom, 1-bedroom studio, and they're good size, they're pretty, and the property has a lot of amenities that I think people are looking for, a lot of conveniences.
Yeah. We should put that on the Venture Residence website, because as a tenant, that's the stuff I want to hear. You know, it's great location. We walked it with an investment group recently, all of us, and one of the biggest takeaways for me is when they were walking the property was the views are incredible.
Mountain views.
Yeah, you see Popco
On both sides, though.
Yeah.
On both sides, which some people I know like to hike, weird, but also just pretty to look out your balcony, which some of our units have.
Yeah. So I agree with all those. I know the last 3 owners of the property. I know everything they've done to it. And like Heather said, this was unfortunately, it was a foreclosure, but it wasn't a foreclosure because of operations. It was a debt, a loan that came due that would not get extended or worked with, and that forced the bank to foreclose, or the bank forced the foreclosure. Anyway, long story short on that is the owners were doing a diligent job of running the property, and they were concentrating on occupancy, dropped the rents a little bit below market to try to get there. So we stepped in, 93% occupancy day one, $1,000 in back rent owed total on the whole property. And other than a few small maintenance things, because they'd gotten to the point where they couldn't pay people that were supposed to work on stuff, and they didn't have an on-site full-time maintenance person, and everything was in line. And I can say every day we look at that property, it's getting better and better. The rents are continuing to increase. We're into how do you get into a property in Arcadia for $150,000 a unit? Yeah, that's a big one right there. And the views are amazing. But just in general, it's a home run for us. It's done right. It's well managed before. Just the rents were low, and all we do is bring them up a little bit and we're going to do some improvements to the property, which you've already come up with. And the way I like to do them are things that return real dollars to us. So we're going to change out the windows on the front of the property on Thomas, because we've heard that the units up in the front are harder to rent because you hear the noise from Thomas Road.
Yeah, these great balconies, just
beautiful balconies,
noisy.
Because they have single pane old windows in them. And I talked to Danny today, I had her construction. That's the first thing we're going to get working on. Sliding glass doors, windows there. Probably $5,000-$6,000 in workforce, maybe 10. I mean, depending on what the custom windows cost, but bumps the rent right away.
Yeah, my favorite thing about the property is just, John touched on it a little bit, is the purchase price versus what it was valued 2 years ago. So in 2022, it was valued $18,250,000.
Well, that's what they paid for it.
Yeah. And we're buying it in foreclosure, or we bought it in foreclosure for $11 million. So $155,000 a door. John, what are the sales comps in the year looking like right now? What do we expect to be able to sell this at?
Well, so full disclosure, it's been a very slow 2 years for
Yeah.
multifamily transactions. Hence, let's talk about the elephant in the room, the fact that there was some pressure. We were feeling pressure, but not really, from our investors about how come we haven't gone out and bought a property yet.
Yeah.
We raised the money in the stress fund, and my comment was, hold steady. They're going to be there.
Yep.
And we just bought one of the only foreclosures, and we're in contract to buy this a second one.
Yeah.
The only two multifamily deals in foreclosure in the metropolitan Phoenix area. So all that stuff works really, really well for us.
I want to tell you, you said we took it with only $1,000 owed. This February, we ended it with every dollar collected.
That's
And
amazing.
we're on track right now we've already gotten most of the rents for.
And
for
today's
March.
the 4th, so we picked
Yeah.
up most of the rents.
Yeah, these tenants are excellent communicators.
So just the value is great. Being able to purchase it for $11 million in foreclosure.
I know.
love
Your
a deal?
question was, what are the comps like?
Yeah.
Okay, so what the comps in the area? You can add some of the some stuff before, but also the comps in the area. There's not a lot of them, but the ones that are closed, there's nothing really under 200,000 a unit.
Yeah.
ABI did sell a building down the street for 135,000 a unit, and if anybody looks that up and sees it, go, "What are you talking about, John?" That building was a negative cap rate. I know that's hard to think about, but an owner who owned it for like 35, 40 years, family didn't want to keep the property. He didn't want to keep running it. We sold it, but we sold it at a under a negative cap rate. So that's why that sold the price. The buyer that came in with a whole lot of cash, great opportunity, but a lot of work to get those rents up.
And this one really, we have a fantastic on-site property manager. We have maintenance on-site. So a lot of these things the property needed were easy solves. And it was just keeping things tidy and being really good communicators with the tenants there who are really good communicators back. And it didn't take much to get the property running really smoothly.
Yeah. With respect to rents have stayed flat the past 2 years in Arizona, notably in Arizona, but across the U.S. Why is this market, do we expect rents to go up and the value of this building to go up? Why is Arcadia positioned so well?
They've been flat, but we have seen some neighborhoods that have had some increase in value in rents. And we're seeing well-managed properties are getting rent increases on retention.
Yes. We had tenants coming in to us who are renewing for April, May, June.
Yeah.
They wanted to be on top of it, and we've been able to bring them up to the market, closer to the market rate. They've been able to make that jump because they understand what they're getting in this area. They want to be there. They want to stay at this property, and so we've had a lot of success with saying, "Hey, the rents have got to come up," and they get it,
And
they wanna
that's
be
the whole
there.
thing.
Yeah.
Higher rents on retention.
Yeah.
And that's what. Thank you, Heather. You're doing a great job because that shows that we as a company are providing great housing and great communication to our residents.
Heather, and you mentioned there was a specific scenario on the property where we were able to lease up a 2-bedroom at market rents. Can you walk us through that? And then also why tenants like having maintenance in-house?
So I just want to say, first of all, when it comes to maintenance, the data they have when it comes to like tenant retention, one of the biggest indicators is their satisfaction with maintenance.
Yeah.
And we have, I think, the most phenomenal maintenance crew of anyone. And we get the best feedback from our tenants about their experience with our guys.
That's
And
awesome.
They're prompt. They take a lot of pride in their work. We manage in-house. We own the properties. They feel a lot of responsibility, a lot of ownership over the work they do. And so we have someone there who's on site. They address things quickly. That does so much more for these residents who've had a lot of transition as it's gone through owners and now it's us. We can say, this is our commitment to you, and we are here on site, and we are attentive. You're being heard, and we're going to take care of it. Katie, the manager there, and Danny and Carlos that are there, they take care of that. We had a 2-bedroom there. I think we'd had the property a day, maybe a day and a half, and we had someone drive by, come off the street. They work at the airport, and they wanted to see a 2-bedroom, and we told them the new rents, a little higher rent. And she first a little unsure, but she talked with Katie. She saw the unit. Katie really walked through what we could offer, what our commitment to our residents are there. And she got it, and she was thrilled and signed, and we're so thrilled to have her. So a lot of it's just communication, and we take a lot of pride.
Yeah, and I think going forward, though, continues to see the rents go up. Part of the question was what's going to happen. Well, all the construction that's finishing up now, we have a lot of units that came online last year.
Yeah.
And there's a lot of concessions. So we are competing with some of the new product that are willing to give away quite a bit of rent to get people in. And I get it. People look at that and go, I'll move into the new building for a little bit more. But what they don't understand, or maybe they do, and they're willing to take a chance, when that renewal comes up for them, it's going to jump.
Yep.
Where we're going to be a much more affordable option and probably a lot more attentive on our maintenance and on our staff than those other properties. But all that stuff comes to an end this year. The construction bubble we had is leveling off, and probably more importantly, not much else coming on for a while.
Yep.
And that's going to make a big change. At the same time that we have tremendous amount of people continuing to move into Arizona,
Yep.
a lot of job growth. And I don't know if we're going to talk about this, but personally, my biggest excitement for the week, other than buying our last property last week, was TMMC
Yeah.
announced they went from their $10 million original purchase,
$10 billion.
10 billion development, to 20 to 40, and then I heard right at the end of the year they pushed it to 65, and then we heard this week they're going to do a $165 billion investment into Arizona. That is massive.
Yeah.
Now, yeah, that's. I mean, what it's going to take to build that, the people, the materials, the suppliers that are going to need their spaces built,
Yeah.
the manufacturing to support that. I mean, just the concrete we're going to need to build that.
Yeah.
It's amazing the amount of people it's going to bring into this, and these are high-paying jobs.
Yeah. High skilled too.
High skill, high-paying jobs. Yep.
Arizona is definitely positioned for growth, and that's crazy to say. You know, I feel like we're a top state as it is, but people are going to continue to move here. They need a place to live, and the cost to own, especially in Arizona, we talked about this on last week's podcast, is 100% higher than the cost to rent.
Yeah.
So rents, obviously, they're going to have to catch up. If history repeats itself, rents will run in parity with the cost of owning, but it has to catch up, and it's more affordable right now, so people will continue to rent. Last question I have for you guys. What is one key takeaway you want investors to understand about venture on 52nd and why it's a great opportunity to get invested?
I'm just going to say that, again, we stepped into a project that was fully renovated, nearly fully occupied. It is, I think, fully occupied now, maybe one unit vacant as of today, the first week of March. And every time we touch something or look at something, it's better than we thought.
Yeah.
So I think we got very, very lucky on that deal. We work hard to get lucky, but I think it's a really well located property, a great price point, not a lot of risk exposure for us at all, and a little bit of rent increases combined with a little bit better debt down the road is gonna pay off in piles for us on value.
It has been the smoothest transition, this property. I said, buy more, just like this. I keep telling Jameson, buy more like this, more. You can load me up with these kind of properties.
Yeah.
Because it's functioning, it's healthy, and the residents are wonderful.
Yeah. And investors watching this, you can invest directly into Venture on 52nd and receive a 12% preferred return, or you can invest in the opportunistic fund and indirectly invest in this. The opportunistic fund holds Venture on Coulter, will hold Venture on 52nd, and other future distressed assets. I know I said last question already, but John, you mentioned we got the 2 foreclosure deals in Phoenix metro area. Do we anticipate more deals coming out of the market like this?
Yes, the thing that which is good, we didn't know last year how fast things would come out.
Yeah.
Lenders are doing extend and pretend. They're working with the borrowers, and I actually appreciate that. I think it's a good thing. But there's a little bit of fatigue that sets in, where either the borrower says, I'm just done running this thing, or running it at a negative and I can't keep doing this, or in situations on both of these properties that there's a debt event where the debt comes due, a rate cap expires, things like that. And we're seeing these isolated incidents, one-off things, and we're getting the tap on the shoulder. And again, we understand the assets, we move fast, we close fast. We've got partners that are coming in and put up the money, like for the trustee sale on 52nd, they put up the money for us so that we can take control of it and then close them out and buy them out in another week here. Yeah, there are going to be more deals. We're looking at a few of them right now.
I'm ready for them.
Thank you for listening to our podcast, the Multifamily Masterclass. Please subscribe to get all of our new episodes.